Hey, Josh, we've got some new indicators of institutional interest in cryptocurrencies. Grayscale, which is a crypto investment firm, saw its assets under management rise 900% last year, as Wall Street used it as a proxy to invest in Bitcoin. The firm kicked off last year with about $2 billion in assets and ended with more than $20 billion. Grayscale's Bitcoin Trust has become a popular publicly traded way to get exposure to crypto without owning the coins themselves. The investment product saw an 870% rise in assets. Grayscale says this was really driven by demand from buyers like hedge funds, endowments, and pension funds. Those institutional investors made up 87% of Grayscale's inflows for the full year. And the average size of those commitments more than doubled in a matter of a couple months. This comes as high-profile money managers publicly warmed up to Bitcoin. We had Paul Tudor Jones, Bill Miller, Stan Druckenmiller, and some others. A backing from those guys gave a lot of other investors confidence to buy Bitcoin. It's seen as one of the reasons for crypto's climb to 40,000. Back to you guys.
Kate Rooney, that is a great setup for our next discussion. For more on this record-setting year for Grayscale, I'm joined by Michael Sonnenschein, CEO of Grayscale Investments. Michael, thanks for being with us.
Thanks for having me.
So given these numbers that you just released, I'm kind of curious. I mean, this makes sense to me, right? Especially with institutional money coming in. It's a way to have exposure to Bitcoin. You don't have to own the coins. It's more liquid. You don't have to worry about, like, forgetting your passwords, which is something that we talked about on our air yesterday and is a big issue for some of these stranded Bitcoin millionaires. On the other side, though, I mean, for the Bitcoin purists, the crypto purists, in some ways it almost kind of gets away from the whole point of what these cryptos were created for in the first place. I guess I wonder how you see this market now growing and evolving, especially with institutional players getting more in the mix.
Well, there's really no question that what we saw throughout 2020 really is a crypto market that was not the same as what we saw in 2017. This market has matured, not just in terms of the types of investors getting involved and the size of the allocations they're making, but also the market dynamics. There's a two-sided market. There's options, there's derivatives, there's lending and borrowing. And so when you have those kinds of dynamics at play in the market, it's drawing in a lot more participation from the institutional community. And certainly at Grayscale, like Kate said, last year we brought in over $5.7 billion, which is over 4 times the amount of money we raised in the previous 6 years combined. So institutions are really showing up to this asset class in a meaningful way.
Hey, Michael, it's Josh Brown. So you were sitting in my office, I think it's a year ago this week or this month, and you told me exactly how the next rally in Bitcoin would play out, that it would be institutional in nature. And the case that you made was, for Grayscale, for your product, was that you had something that was worth more than anything else, which is a ticker symbol and or a QSIP. And if you don't have a ticker symbol and or a QSIP, it's very hard to get institutions involved because they want to own this stuff at custodian brokerage firms that they work with, that they trust. Okay, so you nailed it, and that's exactly how this year played out. One component of the asset management industry that has not yet come in, and I think this is probably due to fears about regulation, is my component, the wealth management side. So now we have family offices, hedge funds, okay, they're in. We've got large asset managers, they're in. When do you see financial advisors start to make use of stuff like Grayscale Bitcoin Trust and or other products that give them that ticker, that QSIP, that ability to be involved at the brokerage firm level?
I think it's a great question, Josh. I think looking
I'm really good at this.
The number of inquiries that Grayscale is getting every day from the RIA community, the FA community, it's coming up in conversations with their clients, whether it's client directed, saying to their advisor they want exposure to Bitcoin or crypto in general, or advisors themselves, like you, have gotten bit by the crypto bug and are realizing that it makes sense in their client portfolios. We're fielding a tremendous amount of inquiries about this. And so I would venture to guess that this year you will start seeing the emergence of a lot more participation from that community. And I think the biggest aspect of it is education. So we're super committed to developing educational resources and have quite a few on our site, particularly for the financial advisor segment. But really, you'll start seeing a lot more of that coming this year.
Yeah, and I guess along those lines, I mean, we've seen repeated attempts at ETFs that have been repeatedly shot down by regulators. But given the fact that there does seem to be this turning tide right now, if we were to finally start seeing Bitcoin or crypto ETFs, what does that mean for Grayscale?
Well, I think from our seat, a crypto ETF is really a matter of when, not a matter of if. And if anything, from the kinds of numbers that we're putting out, and the community should really be digesting this, that in fact, investors, be them high net worth investors, retail investors, hedge funds, no one is really waiting for a crypto ETF to emerge to begin participating in this asset class. And I think that's a really important distinction.